Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me for this segment, we have Terrence Yang, managing director at Swan Bitcoin, to discuss the short, medium, and long-term thesis on Bitcoin and new securities law enforcement could do to reduce wash trading and price manipulation. Terrence, it's great to have you with us. Welcome to Trade Talks.
Thanks for having me, Jill.
You got it. Let's start with your short-term thesis. You think the price can drop to 21,000. What do you think the catalyst is behind that?
Yes, so I think there's excessive hopium in Bitcoin and crypto about how soon a spot Bitcoin ETF will be approved. Also, they're overly bullish on Ripple, and they're not as pricing in all the things that could happen with Binance, Huobi, and other Chinese exchanges that are alleged to do significant wash trading.
So when you think about it from the medium-term perspective, this kind of is predicated on what happens with a decision for Bitcoin ETFs.
Yes, I think that will be a huge catalyst. When that happens, I don't think it's a matter of if, as Clayton and others have said, former SEC Chairman Clayton. And the reason is because Bitcoin makes too much sense as an asset. You have BlackRock, Fidelity, and Invesco, each managing well over $1 trillion, who have all applied for spot Bitcoin ETFs. And the justifications that the SEC used in the past to deny spot Bitcoin ETFs, but approve futures Bitcoin ETFs, those are not good enough reasons, as the District Court of Appeals has ruled in Grayscale versus SEC.
So when we think about it longer term, right, 10 plus years, this is really going to be around the foundation of securities laws and putting the framework around it, right? So what does that mean in terms of price levels, and how will securities law enforcement bring it to the next 10 years?
Sure. So first thing I should say is Bitcoin, unlike all the other altcoins or other cryptos, Bitcoin is not a security. It's very clearly a commodity. It's decentralized. There's no leader, no website. It's very hard to censor or confiscate Bitcoin if you hold it the way it's meant to be held, kind of like physical gold. The other coins, they are getting cleaned up, and there's even more wash trading and price manipulation there. I would say on the order of 10x, if not much more. But for Bitcoin, because Bitcoin is such a young asset, unlike gold, and even with gold ETFs, when those got approved, you saw gold prices go up over time and stay up. The same thing will happen with Bitcoin, but maybe 100x more. Because Bitcoin is so young, a lot of people think it's a scam, but once BlackRock, Fidelity, and Invesco put their seal of approval on a spot Bitcoin ETF and make it much easier for institutions and more convenient for US persons, American individuals and families to buy Bitcoin, I think that's going to help Bitcoin be a rocket ship, both medium and especially longer term.
Well, Terrence, you had mentioned that it's not a security, right? So would that mean the CFTC would be the one to regulate it? And then the question to that is, if you were to get Bitcoin spot ETF, doesn't that fall under the jurisdiction of the SEC? So would two regulators be enforcing here?
Yes, two regulators involved. Bitcoin would be continue to be regulated by the CFTC. The SEC will be involved anytime there's securities law issues, such as spot Bitcoin ETFs, because the ETFs are what? Sold as shares or securities. So the SEC does get involved with that and other products that have a securities law kind of triggers.
Got it. All right, Terrence, we appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq.
Welcome. Take care.